Will 2024 be a year of exchange-traded fund or ETF closures? Hi, Jared Brown here, Aussie expat financial planner based here in Singapore. And in this video, we're having a look at whether 2024 could be a year where investors need to be aware or worried about ETFs closing down. Let's start with the basics. An ETF or an exchange-traded fund is a collection of assets that trades on a stock exchange somewhere in the world. If we look at the Australian Stock Exchange, for example, there are hundreds, if not thousands, of exchange-traded funds that allow investors to invest via a single transaction into a collection of assets. Now that might be into the S&P 500, i.e. the top 500 companies in the US. It may be into the NASDAQ or the technology sector, or it could even be into Australian government bonds or even commodities in some instances. There is an ETF for a lot of different investment strategies around the world. And if we look back at the last 3 years, we've seen about 400 new ETFs released onto the market globally, or in the US largely, each and every year. And 2023 saw over 500 new ETFs released. Since 1993, when the first ETF, the first popular ETF, which I believe was trading on the S&P 500, was released, we've seen tens of thousands of ETFs released. But more importantly, what we've also seen is about 31% of these ETFs shut down. So what as investors do we need to be aware of? What do we need to check for? How do we review our own investments when it comes to checking for this risk? When we assess an ETF, we want to look at a few different factors. Number one, the liquidity of the market maker. How big is the provider? Are you investing in a Vanguard ETF, a BlackRock, a State Street, whatever it might be? How large is the actual ETF provider that sits behind the ETF? Number two is the liquidity, the volume traded every day. How much is actually being traded? Is it a reasonable volume? If you needed to cash out of your ETF, how long would it actually take you? Number three is the stock exchange it's actually trading on. How popular is that stock exchange? Are there any tax concerns or consequences? Are there upcoming tax changes that you need to be aware of? Would this actually impact in terms of the attractiveness of this ETF investment? The next one we need to consider is the domicile withholding tax of the ETF provider as well. If one domicile or one exchange or one jurisdiction is a lot less attractive than another from a tax perspective, then there obviously is a risk that that one could be delisted and obviously shut down. The next factor we want to consider is the size of the ETF itself. How much money is actually pooled in this ETF? If it's below $50 million as a general rule of thumb, you might want to be a little bit concerned, or at least mindful, that that would be considered a very small ETF and could be at risk of delisting or shutting down. The next factor to consider is just how niche the actual investment strategy of the ETF is. We've seen so many ETFs over the last few years really designed to chase the flavor of the month more than anything. Whether it's been a crypto, whether it's been an option strategy, a hedging strategy, NFTs, commercial property in Thailand, whatever it might be, something really just to chase the hot topic at the time. These tend to be ultra niche, they can be illiquid, they tend to be very small and often carry quite high fees. And when these products or strategies lose that sort of appeal, that zest, that flavor of the month sort of attraction, naturally investors are going to run for the exits. We saw a similar thing with a lot of the ARK funds over the years. People chased a lot of these sexy, exciting strategies, these niche developments, these disruptive technologies, only to see their funds decimated over the last 12 and 18 months. So this is not a warning to get out of all of your ETFs. They certainly serve a purpose. I'm a big fan personally, but certainly a great time at the beginning of 2024. Review the ETFs you're holding, consider the underlying risks, and make sure that your ETFs are not at risk of shutting down.